Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun. Good morning, everybody. Sorry I am late. You know what happened was I thought I started the stream. I clicked the button. YouTube is being weird. Their streaming interface is being a little weird this morning. Okay. So I went through all the charts and everything, came back, started my the robot, and it's like, are you live? Because I can't find the text to speech. You know, I can't find the number. Good morning, Lucas. Okay, now that's working. Okay, so let's come to the charts really quick. When I woke up this morning, I saw a headline from CNBC saying that the rates were rising ahead of Jackson Hole Symposium, but overnight and yesterday, the treasuries have not moved at all. So I am seeing a change, though. Like, Zero Hedge had a story out this morning saying that a bunch of people are coming out and saying the Federal Reserve should have tapered a long time ago, and they've already made a mistake, which is a very big change in tone for them, because they've been on the side of, oh, they're never going to taper, it's all a big bluff, yada, yada, yada. Now it's like they're kind of coming along with me. They're like, dude, like, they should have tapered a long time ago. This is getting crazy. The rate is just too low. Okay. ES yesterday closed down, so we should keep that in mind. The options, you know, as long as they're above 44.50, I think that they'll be fine. But it's a Friday, the Jackson Hole, I don't know. This could be really crazy. It could be nothing. Oil is just looking great. I think we should have a poll. What is your end of year forecast for oil? We'll put that in. Okay. Gold continues to struggle with the 1800 level. It's just like they're really fighting over that. It's really interesting to me. You would think that they would just, 1800 is a nice price, let's just stay there. But no, they like fight to keep it above or below that line. Okay, copper doing okay. China coming in and releasing some of their metals, so they're kind of suppressing the price in the metal complex. Okay. Oops. We need to come to the 60s. So the dollar slightly stronger from yesterday, but it's been very range bound the latter half of this week. All right. And the bitcoins down a little bit. So they've kind of been the past 5 days or so since they touched 50K, a little bearish. It's kind of funny watching the Bitcoin guys. They're kind of unhappy that it's not just continuing up to 100,000 all of a sudden, but nothing significant has actually happened over there. Was it the 7-year auction, the thing that caused that whole retracement on ZN yesterday? Between that and Kabul, I was seriously disappointed. Well, you wanted to go down, huh? Well, yeah. So there was a bunch of things that happened yesterday, right? Now, hold on. We're going to get our number here in 30 seconds. So let's pay attention here. See what we get. So remember, the number that we're looking month over month is spot 3. Core PCE price index spot 3. There's a fly in here. Gosh dang it. I have to kill it. Later. Inline. Number is inline. I'm gonna have to kill this fly. Okay, so yesterday, we kind of had some data that didn't really end up being much of anything. So they were moving down, but then we saw some moves from a couple of things. One thing that I saw was there was a decent bull run at the beginning of the day, and there was a very heavy Japanese yen correlation on that. So I think that may have been some foreign funds coming in. Then we had the cobble thing. The cobble thing definitely created some flight to safety yesterday, right? And moved the treasuries up moderately. Yes, I rolled yesterday. Then the 7-year auction came in, and that was really interesting because the auction tails, which would suggest yields coming up and treasuries coming down, right? But the foreign demand in the 7-year was pretty strong. For some reason, there is this demand coming in from Japan in particular, from their funds. I don't know how to calculate. I wish I had a way to calculate like how much there is and how much there's left or whatever, but I think that was what was going on in the 7-year, and that has kind of been propping things up, right? But then we've got this Federal Reserve thing. So even though yesterday we basically ended up unchanged and were unchanged overnight, we were getting indications of a lot of things going on there that we need to keep an eye on. So it really complicates this Jackson Hole trade, doesn't it? Are there any tools that you use to watch the volume? Nothing other than the pace of the roll tool on the CME website. When I looked yesterday, it looked like they hadn't completely rolled over, but when I rolled over, I mean, you can see the liquidity is over here for sure. So, but we were definitely getting some unusual cumulative delta readings yesterday. So, you know, like in this contract, in the December contract, there was a lot of selling into the close, even though the price didn't move. So I don't know. By the way, welcome to the stream starting in the middle. So what was I going to do? Oh yeah, I'm going to pull you guys on oil. Let's do a pull on oil. Okay, so it is just below 70. So we're going to ask a poll. What will oil be by end of year? And then we're going to have greater than 70, greater than 80, greater than 90, greater than 100. Oh, how many am I allowed to have? Okay, let's change this. Less than 70. Greater than 70. Greater than 90, greater than 100. Okay, we can only have 4 options. Yes, I'm comparing the DOM with yours. Liquidity seems to be better on December. Now, I saw your message on Discord about being excited about the interview with Gary. You should be excited. Like, I don't, like, I'm not just trying to, like, overhype everything. I can tell you, like, that night that I talked to Gary, if you're listening, that night that I talked to you for 4 hours was, like, the most fun I've had all year. I really enjoyed talking to him. And, I'm just gonna do the portion. I talked to him for 4 hours, but only 2.5 of that was like supposed to be the interview. And I was like, well, we might go in and cut some things out. There might be 1 or 2 sections where, since what he was asking since then is not really, sorry, what I was asking since then isn't really so relevant. So I might cut out 1 or 2 parts, but it's still gonna be a really long video. And I'm gonna put it out on Monday. gonna put it out on Monday because he's starting at the beginning of next month. So, but it's long. The first half of it is about his new education course. So you're gonna get a lot of information here. All right. Like all these questions about, well, okay, so I'll tell you one thing. On the forums, there has kind of been this, like, did something happen between Jigsaw and Gary and what the deal is with that? Because people who are complaining about it no longer being on their site. Gary said that he wasn't able to get the list of people that purchased the course before from Jigsaw. And then Jigsaw said, like, I know you guys are talking about it, but we're not going to say anything for now. I don't know anything about that. I don't know anything. He didn't say anything about it. I mean, we covered it, and the gist of what he said was that it made more sense from a business perspective for him to go on his own, which based on what he told me about the course, makes a lot of sense. Okay, so I'm sure that in time they'll get over it. That's just my opinion. I don't know. I don't know Peter Davies that well. I don't know Gary that well, so I'm not gonna try and like read their minds or anything. But from my perspective, it's I can just pretend that everything is hunky dory. Made sense. Jigsaw had business. What is it? Incentives. Gary had business incentives. They did what made the most sense for them from a business perspective. That probably was a little bit in conflict, but it's nothing personal. They'll get over it, I think. But anyways, he said a lot about the course. I'm really excited to see what it's like. I'm really excited. And yeah, but then the other half of it, we talked, and he just says so many good things. So many good things. So we'll see. Okay, so the rate has been rising a little bit, and we are seeing the Japanese yen moving once again. So I continue to see this, like, it seems like maybe the treasuries are making a move, and you might even see here a little bit of, like anything above 133 actually is significant, right? But if it's just a Japanese yen and the amount of volume that they're using to push it, it might not be a real big deal. Hard to say. Are you going to purchase it? Probably. Answering that question would require me revealing certain details. So I'll put it this way. I'm going to bet that every one of you are going to be taking his course in some form. I bet you that every one of you will. Or are you going to stream those streams? I kind of do want to go and purchase the full course just to have access to the community there. So my understanding is that they were doing the quarterly webinars, and he was showing market action and stuff like that. I think that would be fun and interesting, but we'll see. We'll see. Getting me to pay $5,000 for a trading. You've all heard it's around 4K. It's not so simple. It's not so simple. Every one of you are going to take it in some form. It'll be fun. It'll be we'll have a little, maybe we can have a contest here. You'll see. Well, after Monday, then we talk about it, right? I should just not say anymore. Not that Gary would care if I said more about it today, but I want to make you guys wait till Monday because that's when I want to make you watch the video. And when you watch it, watch the whole thing, even though it's 2.5 hours, right? Standard guru rates begin around 5K. Is that that's where you got your number from, Uzi? How are we doing on the poll here? Some of you guys think it will be less than 70? I mean, it's less than 70 right now. But the majority option right now is 50% think it will be less than 70. And then the rest of you are split among the three other options. I think I'm going to go with greater than 100, but I don't know anything about oil, so I probably shouldn't be saying that. I think Goldman Sachs' end of year target was 90. I would watch it anyways. Well, yeah, there's some things about it. Hang on. Let's talk about it on Monday. What else do we got to talk about? Oh, guys, we got to talk about Powell, man. Yesterday I was like, I think I was just kind of a little bit shell-shocked. Man. Did you guys watch Biden's press conference yesterday? We watch whatever you post anyways, thanks. It's a long video. I'm a little like, I'm wondering if I should like split it up or what I should do there, but it's okay. It's okay. No, did you watch Biden's press conference yesterday? Yesterday, you said if one Marine was killed, this is such a tragic situation for everyone, but especially for our sitting around. Yeah, well, my understanding is that they've confirmed like 5 deaths now. Yeah, I mean, I don't know. So I still see some media seems to be really trying to just ignore it. What happened was he too lost? What do you mean by that? Oh, right, Biden. Yeah, so like, here's the thing. Is it 13 now? Really? It's just a lot of people died from it. I can say that, right? What kind of topics are you talking about in the video? Yeah, that's a fair question. I can tell you. I'll tell you. I had like a list of questions that I get sent to him over beforehand, and that's pretty much what we talked about. So we talked about his course, why he decided to go on his own, what's going to be new in it, how much it costs, market making. We talked a little bit about the yield futures, spreads. We didn't have much to say about spreads, but it was interesting. Then we talked a lot about technical analysis. What are the things about it that he thinks makes it not very effective? We talked about the crazy risk taking in the markets. We talked about like things in the market that would like change, like regulations and so forth, and a bunch of other things after that. So yeah, that's kind of what it's about. So I think it especially for you guys that are here on the stream every day, you'll really, really enjoy it. Because you get to hear me, try and sort out some of my ideas with what Gary thinks, and that's kind of fun. And then so they kind of stopped there at 02. That this kind of looks like not like a strong buying spree, although the deltas do seem to be going, especially in the 5-year. But they and we did come down on about 0.5 of a. Okay, Bosick says he doesn't expect a strong reaction to the taper decision. Some of them are all talking before the Jackson Hole thing. They're like all on TV, right? Anyways, back to the Kabul thing. So like, here's the thing. Like, that's a terrorist attack. It's a significant terrorist attack. It's not like 9/11 levels, but it's certainly like equal to the USS Cole, for instance, right? So here's Joe Biden. Here's Lucas is saying, what happened? Was he lost? Here's how I can put it to you, Lucas. It was the most important speech of Joe Biden's career, and you haven't heard anything about it. That's how bad it was. That's how bad it was. Yes, that's correct, Win. If you haven't read his book, Technical Analysis Exposed, that's a free PDF. I would highly encourage it. Anyways, so at the beginning of Joe Biden's speech, he comes out and he says, okay, they gave me a list of people to call, so I'm just going to go down the list, and here's the first person on the list. So he straight up told us now that he has a list of who he's supposed to call on. Like, what? He outright blames Trump at one point. It wasn't a good speech. Let's just say, like it was. I mean, I was already kind of leaning this way, but like after all of that, it's like, this guy is not competent enough to be president. He's just not. The way he collapsed on himself when Peter Doocy questioned him made me feel bad for him. Yeah, I haven't watched the whole thing, but I only watched like the first part of it, so I haven't gotten to that part. But it was just like, what? How can... Yeah, I mean, I really think you've got like an LBJ situation here. Like, so remember LBJ, his handling of the Vietnam War did not end up being very good. And so he didn't resign, but he basically said, I'm not going to run for office again. And it sent the Democrat Party into chaos, and is basically what led to Richard Nixon being able to become president, right? And I think we have a similar situation. I don't see how Joe Biden justifies running for office again. No way. No way. I'm starting to think that there's a very high probability that he resigns before the end of his term. Like honestly, this is the worst week, 2 weeks or whatever, for a U.S. president in history. I don't think that another president in modern history has had a worse week. Oh yeah, and their eviction moratorium that everybody said was unconstitutional got struck down by the Supreme Court yesterday too. So on top of all of that, the American public knows that they're not going to uphold the Constitution. They're going to try and end round around it whenever they can. It's just an absolute disaster. Like, all of this stuff about Donald Trump is a huge weight on his party, and probably it did lead to some extent that maybe if he wasn't such a weight, Republicans could have taken over the House, for instance, last election cycle. That sort of a thing. Okay, like Joe Biden, this is such a disaster for their party. It is no longer a question of like, will Republicans take over the House in the midterms? It's like, by how much? By how much? Name one politician who actually respects any constitution from any country. Well, listen, they're always going to make mistakes or maybe try and toe the line. But there were many, many times where it would have been very much in Donald Trump's favor to just ignore the Constitution, and he didn't. So how dare Biden try to stop people from being left? Yeah, seriously. No, he's literally stealing from people. It is a violation of the Constitution. He is violating people's right to property, and he knows that it's unconstitutional. And they just said, well, we're just gonna not follow the Constitution anyways, and wait for the Supreme Court to strike it down. Yeah, listen, if the people that are homeless, like, y'all just delaying the inevitable. Like, people need to get back to work and get on with their lives. And this whole, like, eviction on moratoriums is not right. It's not right. And saying that some people will be homeless because of it is not a justification. Yeah, you're causing more problems. You're causing more problems by stopping this. Gary Norton's PDF. Yeah, he has a PDF that I think you go to his website and sign up for it. I don't know how you get it now. I could post it in Discord for you if you want, but he has an ebook called Technical Analysis Exposed. So he originally wrote a book and it was published, and they didn't allow him to say everything in the book that he really wanted. So he rewrote the book the way that he wanted and released it as a free ebook. The housing thing, it's going to be, it's interesting to me how housing is becoming a more significant issue now. Like in Canada, they're saying they're getting rid of the silent bidding process. Basically, like, all of the offers that get put out have to be made visible to everybody on the house. It is not going to solve their problems, by the way. It's probably going to make things worse, actually. There you go. No, that's the old one. Technical Analysis in the Active Trader. I think that's the old version of it. Well, the treasuries moved up here quite a bit, actually. Delta's still, like, not excessive. ZB, probably, they're like, what, 2,500 now? So that's a little bit big. But it still looks like it's coming from the Japanese yen. So I don't know how this ends up in the long run. It may have absolutely no correlation to what the market decides to do once Chairman Powell starts speaking. It might be like a total head fake deceptive signal. No, those are, I don't think you're getting it at all. Let me find it. Oh my gosh, let me find it. Is this it? Yes. Okay. This is it right here. I know it's at a really weird URL. I'm impressed at how treasuries have been moving this summer. There would have been a time where this type of action was rare in treasuries during a whole year, and we had this during the whole summer. I don't know. Like this degree of a move is like an average move. But yeah, most moves are not that big. I think the thing that's been unique about it this summer is that you'll get a move up like this, and then it will come all the way back. It's just I think the larger issue here is that the liquidity is just not very good, right? I mean, look at some of the numbers and everything. Like, they're not trading a whole lot to make it do that. But it certainly has led to good trading for us, isn't it? Not good for my swing position there, but that's okay. There are NFP days where the treasuries didn't deal with it. Well, let's see here. How far was it? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Yeah. Like remember that it's always been like I'll get a 10 tick winner and then I'll always regret not taking it off, right? So 10 is a good move. 10 is a good move. I remember days like when I first started doing this where, a half a point was pretty average. I remember webinars with John where we SOH while nothing happened. Yeah, well, especially in the summer. I think that the impressive thing is for this to be happening almost every day in the summer is quite good action. I don't know. Like it's interesting to me. If I come back to the volume profile, well, I don't know. I don't have things back adjusted, but this still doesn't retrace this move from 2 days ago. That was a much more significant move, right? Like, I guess what I'm saying is that I think I'm trying to make a different point. Two points here, because the one point is trying to comment on what you're noticing, which is absolutely true, that treasuries are moving more than they would in a normal summer. But the other point that I'm trying to make is that what I'm seeing does not convince me that this move is from informed trading. Makes sense? It could be random. It could be, in fact, I believe that it is Japanese funds doing their thing, that there's Japanese funds that just really need to buy the treasuries, and maybe they're trying to get it done before Jackson Hole, which wouldn't make any sense because the market should go down during, I don't know. Talk about making 2 points, where's ace? So the mini's been pretty quiet, huh? Yeah, we need ace in here. You know what's going to happen is he's going to come in. I mean, this is around the time that he would come in, right? And then right when Powell starts speaking is when he'll have to go and cook the food. Ace, you should go and cook the food early. Go and get some waffles made now so that when it's 8 o'clock and he's speaking, which is at 10 o'clock Eastern time, Keller asks. So at 10 o'clock Eastern time, then he will be here to watch it and he can try and get his 2 points during that. Actually, maybe if you probably shouldn't scalp during that. Unless there's like a strong initial reaction of some sort. But now I'm going to close some of these windows I don't need. Traders, if you haven't hit the like button yet, then please take a quick second to do this for the channel. Thank you, Win. By the way, I noticed that as soon as I went live, 3 of you guys hit the like button, so thank you so much. And also, for those of you guys on the TikTok, man, I tell you what, I'll put a TikTok out and then like 1 or 2 people comment and then all of a sudden it's just crazy. I've had 3 videos that reached 15,000. So, thank you. We're reaching a lot of people. I wish that more of those people were resulting in subscriptions, but we'll work on that. I don't know, like one of the things is that, so I can go out on TikTok and I can say, I'm going to teach you about X things, so subscribe, right? That seems to work. But I don't want to teach them everything I've got, you know what I mean? Sometimes this room is like nails on the chalkboard. Probably doesn't want to hear too much about Koppel, does he? Oh, man. No, Ace, we were just saying you should go and cook breakfast now so that you can watch the FOMC, or not the FOMC meeting, so you can watch the Jackson Hole thing at 8 o'clock. I don't know if I could probably, you will still get your 2 points before the open. That's possible, at least. But I'm going to bet that it's going to be a bit like yesterday where, you might have to take a couple. So we got 12 votes now. It's even out a little bit, but I'm still surprised the number of you that think that oil will end the year lower than it is right now. So that's curious. I suppose there's no reason for me to end the poll, so we can just keep it on. Yeah, I will be streaming it here. I need to keep the Twitter up here. Paladin says SEC is also investigating companies' disclosures. Harker, Fed should finish taper before considering a rate hike. That move up there, they might have said something that I missed. Dollars up, interest rates down. Well, you would think that that's what would be happening, but it's not exactly what is going on. But I come over here and I look, it ticks up. Hardly any contracts trade to make that happen. So the robots decided to let it tick up for a reason. And why is that? And then I come over and I look at the 6J, and the 6J moved. So the market makers are moving based on the 6J, essentially. There's people dropping roofing materials on my roof, and it's freaking out. Oh my gosh, yesterday I'm just sitting here watching a video of some sort, and I'm hearing like the ground is shaking. And I'm like, what the heck? Is somebody in the next room like jumping? What is going? How is they doing that? And it's like shaking so bad. And then I look over, and Asher has his bike right next to me, and he's been jumping up and down on the bike, and that's why it was shaking. He was literally right there, and I didn't notice. You saw a huge car crash? Oh man. Story time. Yep. Bitfinex is talking about the whole NFT thing, and he's saying, founders are buying large sums of their assets at a low price, which implies they are deliberately purchasing and selling the same back and forth. This creates an illusion of demand through wash trading. Yeah, that's exactly what it is. It's probably wash trading. Maybe Toddler Asher would like a pogo stick. You know what we have for him is we have like a little inflatable bee that you can jump up and down on. Okay, now there is this fly in here. The problem is I don't think he's going to go to a place where I can actually get to him. I'm going to stand up and see if I can. I almost had him there. I think I got it. Wait for it to land on a flat surface with some open area around it. Swipe a couple inches above the fly and close fist. I've heard those sorts of things and I've never been able to figure that out. But I swatted him and I actually did get him. Left to right is better than up to down. Fed's semester is now a matter of articulating the policy position on tapering. I'm ready to talk tapering plans in September. Yeah, I picked it up in a what do we call these things? A tissue. I picked him up in a tissue. At first, I didn't think that I got him, but then I looked on the floor and I saw a dead body. It's possible that it was a different dead body. We'll see. We'll see if I start feeling him again. That drives me crazy. Having a fly buzz around you is particularly difficult. Challenging for somebody with ADHD. Do you see another fly? I think it was just one. It was just one, and it was a small one too. I'm pretty sure that was it because it was small. It's really frustrating because you keep them all out and then it's like you make one mistake, right? Make one mistake, you open the door's left open for too long and they all come in. How does it work that way? Unless such difficulties are resolved, the child care labor market will face challenges, huh? There's no need for the same level of accommodation as there was during the height of the crisis. Yeah. Will I get more than 5? Well, okay. I'll over here on this one, if things go well, maybe we make another $50 on it, I think. Like if the yields were to move even 10 basis points, I think that would be a lot. Higher prices in certain components are likely to last longer than the Fed anticipated, feeding into inflation expectations. Okay, that market moved on that one. Oof. But you can still see it's only a few hundred contracts that's causing it to move, right? It's like the market makers adjusting to it. It's not actual supply and demand coming into the market. It's not actual market orders coming in. Want the tapering process to be as easy as possible. I am keeping an eye on whether one-time price hikes become ingrained in inflation expectations. They have achieved this now. Okay, now that's a big deal. They're saying we have achieved the inflation goal with inflation averaging above 2%. My priority is cut down on asset purchases, then contemplate interest rate hikes when the time comes. They want to get that rate back up there. See, I think the market wants to believe that this is just like after the financial crisis. Oh, because of the situation and everything, we have to keep the interest rates artificially low for an extremely long period of time. The issue here, I think, is that, there was a pandemic. They really brought the interest rates down quickly. There probably is some justification for rates to continue to be low, but low at 1%, not 0. Right? So I think what's going to happen is they're going to taper. They're going to increase rates starting next year, and they'll maybe do 4 rate increases, and then they might hold off, and it might sit there for a really, really long time. Real estate prices are frothy. Fed's asset purchases are not helping that market. Curiously enough, though, they're not really doing much here at 133. However, there is no bubble. This is just what I'm reading on Twitter. I think that they're being, she's on CNBC. Or is it he? No, it's she. Yeah, Mester is girl. Okay, now as this happened, there must have been another Fed speaker when we moved up. That could have been another Fed speaker. I just wasn't hearing anything at the time. So I can't really say for sure. But when I look at the yen came up a little bit and is now at new lows. And the dollar is strengthening considerably here. So this move down in the treasuries has much more correlated assets moving with it at this time. Also, gold is getting crushed, and which was what we would expect if we're going to see higher rates. Okay, Fed has met the criteria on the macro side for tapering. 5-year inflation average well above 2%. Leverage in the junk bond market is high. Delta variant is a concern, but things are different now due to vaccines. Things are different now. By the way, did you see? Oh my gosh, we got to talk about this. There was a study that showed that natural immunity was like 13 times more effective than the vaccine. Did you see that? Let me go find it. You can save this one because I feel like this is one that's going to get like disappeared from the internet. You know what I mean? It was a large Israeli study. Comparing coronavirus natural immunity to vaccine-induced immunity reinfections versus breakthrough infections. Results. Vaccines had a 13-fold increased risk for breakthrough infection with Delta variant compared to those previously infected when the first event occurred during January and February of 2021. So that's important. Okay. When allowing the infection to occur at any time before vaccination, so from March 2020 to February 2021, which would be me, evidence of waning natural immunity was demonstrated, though COVID-2 vaccines had a 5-fold increased risk for breakthrough and a 7-fold increased risk for symptomatic disease. Naive vaccines were also at a greater risk for COVID-19 related hospitalizations compared to those that were previously infected. Can you share this? Yes, the link. Copy link. Why? Well, so as we've discussed here before, the vaccine is just the spike protein. The spike protein is how the virus infiltrates the cell. So the natural immunity is going to target more than just the spike protein. It's going to target every protein it can find in the coronavirus that is a foreign protein. And so presumably those antibodies against the whole virus and not just the spike protein is presumably more effective. But the study doesn't really tell us that. That's just a theory. That's just the leading theory about why. Thanks. Now I need to get infected. Well, I wouldn't say that. So I would not read this study and say, oh, that means that I would rather catch it than get the vaccine. I don't think that that's what it means, because the virus can still be pretty nasty. Like for me, it wasn't so bad. And I think if you're a healthy person, I don't think that it's anything to worry about. But you're still going to be better off if you had gotten the vaccine. Because, like, for instance, there was another study out today that showed that the blood clot issue, that you were more likely to get a blood clot from catching the coronavirus than you were from the vaccine, which was interesting as well. Okay, so I should make a new folder for medical studies or something like that. Can I make a new folder here, please? New folder. There we go. What about the Chinese vector vaccine? Which I'm not so sure. My understanding was that the vector vaccine wasn't very effective, right? Should you get a vaccine if you were infected already? Do the vaccine and natural infection work kind of the same way in terms of... yeah, so I don't know if they say it in this study, but people that catch it and then get the shot have even better immunity. So it's interesting to see that come out, and that because yesterday Mother Jones was saying natural immunity is a conspiracy theory and stuff. Like, what? Kaplan is talking now. Tapering should occur over a period of 8 months. We want to begin adjusting asset purchases soon. You can get a shot and then catch it like Trump did. Oh, I forgot about that whole thing, man. Oh, that's so funny. Like a Trump bragged about. I don't remember him bragging about his biceps, but I remember him saying that, like, you know, I think he played it up. I honestly do. Like, I think like he caught it and they took him to the hospital. I don't know if he was really as sick as they played it off to be, but I think he intentionally tried to make it like this new medication that they gave him. I forget what it was called. I think that they played it up to tell everybody that, oh, we have a cure. I was saved by remdesivir. That's what it was. I was saved by remdesivir. Do you really believe the whole Fed taper intentions? I think the Fed is not ready to walk the walk. Talk, my friend. Things would collapse if they really taper or raise rates. Okay. I've been waiting for somebody to ask me this. I have. I made a post on TikTok yesterday about, today, and I was hoping somebody was going to ask me that, because the retail trading world does not believe that the taper is going to happen. So here's the thing. I don't think that bluffing makes much sense at all in this kind of case, in terms of like what you think needs to happen. So for this whole thing, like, the Fed is not ready to talk, my friend. Things would collapse if they really tapered or raised rates. Okay, so if the Federal Reserve was concerned about markets falling if they tapered, then why would they put out there that they're going to taper? Because that's only going to push the rates up and cause that panic to happen, right? If that's really what they were concerned about, then they would be bluffing dovish, right? They would be saying, we're never going to raise asset purchases. It's not going to be a big deal. And then only do it when like inflation forced them to do it, right? You would talk dovish. The bluffing doesn't make sense for the economic context. Am I wrong? That makes sense to me, but maybe that's not a good argument to you guys. Right? Here's the thing. Like, can you imagine the impact? Okay, here, every Fed speaker here that has been interviewed on TV has been talking about the taper and saying we want to taper, right? Not only saying like we want to taper, but some of them like Messer saying that like we're really concerned about things like we're causing problems in the real estate market and these other places because of our asset purchases, and we really need to change it, right? And I'm with the people, some people that have really started to come out of the woodwork past few days, saying that like the Federal Reserve maybe already made a mistake, that they should have already tapered asset purchases. Well, there was some concern about like this summer and the Delta variant, and so they held off on it. And now what's going to happen is because the Delta variant is gone, they're going to taper the asset purchases later than they probably should have, because of that Delta variant concern. Right? So say that the Federal Reserve is bluffing, and then September comes and there's no taper in asset purchases, right? Like that would be such a dovish thing, okay? Interest rates go back to below 1% in the 10-year, and the S&P 500 buys, and like it would be like such an insane bubble. Like we're already in bubble territory here, and you get like this huge dovish surprise in November. I'm sorry. I don't think that there is any incentive for the Federal Reserve to bluff. I think that they are telling you exactly what they're going to do. Powell is going to talk about tapering asset purchases here in 30 minutes, and then they're going to formally announce that they're going to do it in September, and then in November will be when the tapering of asset purchases actually begins, and it will last for a period of about 8 months, and by mid-2022 it will be done. And and that scenario is like 85% chance of that scenario happening. They will have to go right back at it. Why would you wait later to combat inflation? Why not fight it right now? Why wait? Well, I think that the reason that they waited, well, two reasons. One, the Federal Reserve does not believe that the specter of inflation is a near-term concern. So they are watching. They got some things to watch, but their base case is that the inflation returns back to normal and is in line with their expectations. So that's the first thing. But the second thing, though, is that I do think that there is some need for them to reduce the asset purchases. I mean, you look at what's going on in the housing market and the short-term funding market, and a whole slew of other things. I think we have a lot of indications that these asset purchases are causing problems in the market. So they probably should have done it sooner. So why didn't they do it sooner? Delta variant kind of, this last two meetings or so has kind of been a concern, I think. But now that we're past the peak of the Delta variant, they don't have an excuse. They have to taper. The tools that you have to use to fight inflation later on when the market gets worse are going to make even more damage. They will have to be more aggressive to fight it. Yeah. I mean, if inflation really started to become a thing, then how would that change our baseline expectations, right? It would mean that they would have to taper even more quickly and have to start raising rates at the beginning of 2022, right? Seems unlikely to me, though. But is going to hurt the market. It is. No question about it. This is another thing that I've been seeing is that, like, some people are saying, well, when they taper, everybody says that the market is going to have a big deal, but what happens usually is the market freaks out and rates actually decrease in that environment. Like that's what's happened in past tapers. But I think that the situation is different. Those were times where the economic conditions and everything were still like in a very deflationary environment. And now we have the pandemic, which has created an inflationary environment to some extent. And so it's a completely different calculation, right? The whole thing of inflation being transitory is BS. For that to be the case, you would need prices to come down to previous. And no. So when they're talking about inflation, they're only talking about the inflation growth, like the month over month increase in inflation, in CPI inflation, would be like when I'm saying inflation. When I say inflation, what I really mean is the rate of inflation, right? Because you're right, those prices aren't going to come back down. They're probably going to stay where they are. But, if all of those prices stayed where they are for this month, then the inflation number would be zero, right? No, they should continue to increase at around a spot 3% increase every month from here on out. With the caveat that we're probably going to have another supply disruption before the end of the year. Eviction moratorium got struck down. Forget the reaction last time. Did you guys talk about that already? Well, I did mention it. We argued with Keller about, that it was wrong. But I don't know if it has an impact on the market or not. Everybody has this there's been this fear that's been floating around since, the beginning of the year, that when the eviction moratorium ends, that it's going to destroy the housing market. But I don't think that's necessarily the case. Yes, it's permanent. Everyone will be paying those high prices moving forward. That's not but you gotta understand, Lucas, that when the economists and everything are talking about that sort of a thing, when they say inflation, what they really mean is the inflation growth, right? So when we're asking about is inflation transitory or not, what we really mean is inflation growth transitory or not. We had some inflation growth in this year, some months where the inflation growth was really, really high. And what the Federal Reserve is saying is that inflation growth is transitory, that the rest of these months, it will probably be your average inflation number, and that you won't be getting those strong inflation growth numbers in 2022 is what they're saying. That's not what the average person thinks of when they hear it. I don't think that the average person, what the average person thinks of when they hear transitory, that it even they even think anything of it. I don't know if the average person even knows that the Federal Reserve is saying the inflation is transitory. Okay, they are pushing into 29.5 now. There has to be a demand for things because prices can rise or keep the price, ? I'm not sure what you're saying, Tommy. There's still going to be some concerns about the consumer sentiment and the price and the consumer spending numbers and stuff like that. But you know what? Those metrics could bounce back very, very quickly, right? If we're really over the Delta variant, right? Then a month from now, people's perspective on things is going to be very, very different than what they are today, right? Kansas City Fed survey. Moving forward, district manufacturing firms expected materials prices and finished goods prices to continue to rise over the next 6 months. More evidence that in Fed speak, transitory is a very elastic term. Fed's bullard. Fed asset purchases do not have much value now. Yeah. I would like to taper now and finish in the first quarter of 2022. Oh, he would like to be even faster. So when I'm looking at least in the December contract, cumulative deltas and everything is still positive, which means that there are some people that bought there on that initial rise up that are stuck underwater right now and maybe trying to hang on. So if this continues a little bit more, we may, we haven't really seen the squeeze yet. Oh, it's squeezing though, man. Look at that. It's just the market maker doing it. I think you could see some volume coming in to sell here at some point, or at least my base case is that we're going to continue going down, and that we should expect to see some market selling going into this now. Vinny, hello, I'm not experienced. I just started 8 to 9 months back. A question: do you think hedge funds use a stop loss? Yes, they do. But a stop loss for a hedge fund is not necessarily the same thing as a stop loss for us, right? There's going to be a point, because the problem with them is that if they were to dump their whole position at once, it would be too disruptive to the market. But yes, they do have a point at which they say they've taken too many losses and they have to start unwinding their position. Right? It does happen. Okay, now I'm seeing the volume. Does that take us, what was yesterday's low? Oh, we still got plenty of room. 25.5 was yesterday's low. I was waiting for the open on ZN and nothing happened. So funny. Well, I guess I didn't say anything, but if I hadn't have already been in my position and I was trying to just day trade this, I probably would have tried as soon as it started coming back a little bit. I probably would have tried to go short, because like my overall day bias is short, right? So we have a move up. Does the move up cancel out my thesis? Well, it depends on why. But if I don't see a good reason for why, it's probably just random, or in fact, I had some things to suggest to me that it was because of Japan funds. And so, no, it doesn't change it. So then I would want to try and look for it to come back and reverse it. Now, that's a calculation very specific to this market, right? Because I know the market has been moving a lot. The liquidity has still been pretty light here in the summer, and we have a big event today. So I would expect the day's range to be really, really big. On another day, if this was the 2017 market and it was the summer, probably I wouldn't make that trade, because that was already a really big move up and it was unlikely to move much more for that day. So that's how I would have tried to look at it. Okay, so they did tick up there. So market maker may be saying that's enough for now. But again, 25.5 was yesterday's low, so And the E-mini started out okay. I don't know if Ace is still there, if he got his trade or not. It's been pretty choppy over there. You get 2 points, but it's been choppy. Feds Bullard says you could argue this is one of the tightest jobs markets in decades. If the economy grows at 6% this year and in 4% in 2022, jobs will improve even more. Well, it came right back down there pretty quickly. How long do you stay? Until it's done. Yeah, so like we have to think about this as one large meta order, right? So how big the meta order is a little difficult, but very speculative. Okay, so here's my speculation on it. Retail traders are not prepared for a taper. They don't think that the taper is going to happen. They've been misinformed. Professionals know because they follow what the Federal Reserve says, and the Federal Reserve has been very clear that they're going to taper asset purchases. But retail traders, they don't know. So, and there have been probably some people buying the treasuries here, trying to follow the trend, not realizing that they were just following Japanese hedge funds that are buying mechanically with no informed trading behind it, right? So I think that there's probably a lot that could come out. And this move down has been largely market makers just moving it. So I don't think that the meta order is done. How will I know that the meta order is done? In this situation, one, I'm going to want to see some real volume. I want to see people stopping out, right? I want to see people stopping out, and I want to see really large transactions and price getting stuck there. But that could be a lot lower. So we'll see. But those are kind of some of the sort of on a move like this where I'm expecting people to get stopped out. So what does a large meta order being stopped out look like, right? There's going to be some large transactions of people just stopping into the lows. You know, like I expect we should see some situations where it's like 4,000 all at once down there, like that sort of a thing. Feds Bullard, we're emerging from the pandemic with a booming economy. Fed semester I want tapering completed by mid-2022. When they complete, so it's interesting that when they complete the tapering seems to be far more varied than whether, like, I don't think that any of them are saying that we shouldn't taper. And I don't think that any of them are saying that we should start after November. I think that they're either September or November. But there seems to be some variation behind how long they think the taper should take. Excuse me. There seems to be some disagreement between how long it should be. Some of them are thinking that it should only be at the beginning of the year. Others are like mid-2022. So should I short the day's high on NQ? Oh, that's such a good question, bro. That's not that high of the day on NQ, though, is it? Maybe it is. I don't think that it's... Asset purchases aren't benefiting the economy right now, and they may be adding to rising house prices. Anyways, should we short the high on NQ? Here's the thing. I think the interest rate is going to rise. The interest rate rising is not going to be good for large cap techs. So you would expect the NQ to come down, right? But probably the higher interest rate is going to be should be expected. Should be expected. So it depends on how much flow is out there that's going to be surprised by this. I'm not expecting the S&P 500 to fall apart, though. The rates, I think that the rates should rise, but I'm not necessarily expecting the NASDAQ to fall apart from it. It could happen. It's a possibility. If you took it and it worked out, it'd be an amazing trade. But I wouldn't say that it's my base case. No. So, yeah. So I'm not going to say it's a bad trade, but it's probably not a trade that I would make. Okay, so the Treasury come back up there a little bit. And once again, it appears to be currency flow. What's going on here in the... oh man, something happened. I expect the markets to react well to taper in the broad sense. Yeah. I don't believe tapering will harm markets. That might be the thing. It might be, hey, everything can just stay the same. The taper doesn't have to move anything. Hello, AO. How have you been? Maybe that's why they're moving. But I'm seeing all of the currencies move really strong off of that. The dollar just got a lot weaker. Oh, we got the consumer sentiment at the top of the hour, huh? I think what I'm going to have to do is move it over here and hide myself when the time comes. When the time comes. The S&P 500 looking very bullish at the moment. Tapering also indicates faith in economic strength that's bullish in the long run. Yeah, I would agree. I would agree with the caveat that there are many assets in stocks that are overvalued based on unrealistic interest rates. So how it sorts that out, I don't know.
Block by.
Look at that. It comes back hard. 4K into 31. Is there any situation or context where you would expect a market collapses? Is apparently not the context, so which one is it? Well, I wouldn't say that I'm saying that like it couldn't crash here in this, but I do think that if the market believed that, well, okay, so for instance, Brannigan Barrett just tweeted something. A word to the wise ahead of the key Jackson Hole event. Tapering does not mean peak balance sheet. Only once the market understands when the Fed will reach this point will global equities find a top. The devil is in the details of the tapering to come later in 2021. So there's kind of this thing that like there's order flow coming into markets because of Federal Reserve policy. Once that order flow ceases, which isn't today, then markets probably pull back a little bit. Doesn't have to be dramatic. It doesn't have to be a crash, but I just want the E-mini to fall. I mean, it's possible. It's possible that Powell comes out and starts yapping and the E-mini just absolutely plunges. It's possible. Here's the thing that we've seen now. I'm third. This is now like the third move we've seen here in the treasuries. I'm not so sure that there was any kind of comments at the time that caused this latest snapback. It just somebody covered their short there, I think. So what it's actually going to do here is very difficult to predict. Looking to buy E-mini option futures contracts? Okay. You see how they relativize the taper talk? Yeah. Now, are they going to release his full comments at the beginning of this? Euro USD is jittery. Well, the euro is rising here like big time. Look at how much the dollar is getting hurt there. Well, we got the sentiment, consumer sentiment too. That's so. The University of Michigan sentiment final, they're expecting 70 spot 8s. Yeah, we'll watch him. I'll play the audio over here. So I'm going to step out for a second, make sure everything's in line over here in my house. Have you seen Michael Burry? No, I haven't heard anything about Michael Burry. What did he say? The dollar won't sit ahead of Powell, says Forex Live. Yeah, there's people are doing stuff, but there's so much going on that it's hard for me to say, like, people are positioned X and this is where the reward really lies now. There's probably going to be some movement either way. Wow. If you want to watch the Fed Chief Powell speak, you can do so here. The rest of the conference is not online for the general public. I understand, and some people aren't happy about that. Yeah. He has bought call and put options on interest rates. He's short interest rates? I almost wonder if all of that movement was more like somebody exiting a position ahead of a volatility event rather than somebody entering a position in anticipation. So YouTube will cut out links, so just remove the periods and replace them with spaces. I'm hungry. He's 60 seconds. Okay, so they have pulled. The markets are pulling. So again, sentiment final. We're looking for 70.8. No, that's not what I wanted. They are reading his comments out. Oof. Okay, the sentiment was slightly under expectation. So hold on, I'm going to turn Financial Juice off here.
A virtual conference last
There
year,
we go. Can
it
you
was
hear
our
that okay?
hope that we could convene in person this week. And that seemed a reasonable plan before local health conditions changed. I regret the inconvenience of this last-minute pivot to a virtual format and want to express my thanks to our partners at the Jackson Lake Lodge and many others in the Jackson Hole area for working with us for months to make preparations and accommodations. So virtually, we will open the program today with our first speaker, Fed Chairman Jay Powell, whose remarks will be broadcast to the public. Following that, the remainder of the program, titled Macroeconomic Policy in an Uneven Economy, will continue for invited guests. As always, the full agenda and each of the papers presented will be posted at our public website, kansascityfed.org, and a transcript of the symposium will be made available after the event. Now it's my distinct honor to welcome Federal Reserve Chairman Jay Powell. Chairman Powell, I want to thank you
gold
for
is
your
rallying.
flexibility
Well, the dollar
in these circumstances.
just flipped really
virtual
hard
floor
down
is
and
yours.
back, right? Like right now, everything's running off of the dollar correlations.
Thank you, Esther, and good morning. 17 months have passed since the U.S. economy faced the full force of the COVID-19 pandemic.
So just note that his comments have already been
This
released.
shock led to an immediate and unprecedented decline, as large parts of the economy were shuttered to contain the spread of the disease. The path of recovery has been a difficult one, and a good place to begin is by thanking those on the front line fighting the pandemic. The essential workers who kept the economy going, those who have cared for others in need, and those in medical research, business, and government who came together to discover, produce, and widely distribute effective vaccines in record time. We should also keep in our thoughts those who have lost their lives from COVID, as well as their loved ones. Strong policy support has fueled a vigorous but uneven recovery, one that is, in many respects, historically anomalous. In a reversal of typical patterns in a downturn, aggregate personal income rose rather than fell, and households massively shifted their spending from services to manufactured goods.
Well, it
Booming demand for
kind of
goods
looks like,
and the
everybody
strength
was
and speed
talking
of
about the
reopening
taper. It
have
seems
led
like
to
they are going to
shortages and
taper, but
bottlenecks,
his comments
leaving
also
the
seem to be pretty
COVID-constrained
dovish.
supply side unable to keep up. The result has been elevated inflation in durable goods, a sector that has experienced an annual inflation rate well below zero over the past quarter century. Labor market conditions are improving but turbulent, and the pandemic continues to threaten not only health and life, but also economic activity. Many other advanced economies are experiencing similarly unusual conditions. In my comments today, I will focus on the Fed's efforts to promote our maximum employment and price stability goals amid this upheaval, and suggest how lessons from history and a careful focus on incoming data and the evolving risks offer useful guidance for today's unique monetary policy challenges.
You didn't expect this kind of move on ESO? That was
The
a pretty
pandemic
big
recession,
move, huh?
the briefest yet deepest on record, displaced roughly 30 million workers in the space of 2 months. The decline in output in the second quarter of 2020 was twice the full decline during the Great Recession. But the pace of the recovery has exceeded expectations, with output surpassing its previous peak after only 4 quarters, less than half the time required following the Great Recession. As is typically the case, the recovery in employment has lagged that in output. Nonetheless, employment gains have also come faster than expected.
So I'm just going to
The
be
economic
quiet here.
downturn has not fallen equally on all Americans, and those least able to shoulder the burden have been hardest hit. In particular, despite progress, joblessness continues to fall disproportionately on lower wage workers in the service sector and on African Americans and Hispanics. The unevenness of the recovery can further be seen through the lens of the sectoral shift of spending into goods, particularly durable goods such as appliances, furniture, and cars, and away from services, particularly in-person services in areas such as travel and leisure. As the pandemic struck, restaurant meals fell 45%, air travel 95%, and dentist visits 65%. Even today, with overall GDP and consumption spending more than fully recovered, services spending remains about 7% below trend. Total employment is now 6 million below its February 2020 level, and 5 million of that shortfall is in the still depressed service sector. In contrast, spending on durable goods has boomed since the start of the recovery and is now running about 20% above the pre-pandemic level. With demand outstripping pandemic-afflicted supply, rising durables prices are a principal factor lifting inflation well above our 2% objective. Given the ongoing upheaval in the economy, some strains and surprises are inevitable. The job of monetary policy is to promote maximum employment and price stability as the economy works through this challenging period. I'll turn now to a discussion of progress toward those goals. The outlook for the labor market has brightened considerably in recent months. After faltering last winter, job gains have risen steadily over the course of this year and now average 832,000 over the past 3 months, of which almost 800,000 have been in services.
It's really curious to me that it looks like the dollar is the most important mover at the moment, and the yields
The levels of job openings and
aren't
quits
actually
are at record
making a
highs,
call.
and employers report that they cannot fill jobs fast enough to meet returning demand.
So that I'm
These
taking note of
favorable
that because that's
conditions for
not
job
necessarily
seekers
in line with my
should help the
expectations.
economy cover the considerable remaining ground to reach maximum employment. The unemployment rate has declined to 5.4%, a post-pandemic low, but is still much too high, and the reported rate understates the amount of labor market slack. Long-term unemployment remains elevated, and the recovery in labor force participation has lagged well behind the rest of the labor market, as it has in past recoveries. With vaccinations rising, schools reopening, and enhanced unemployment benefits ending, some factors that may be holding back job seekers are likely fading. While the Delta variant presents a near-term risk, the prospects are good for continued progress toward maximum employment. The rapid reopening of the economy has brought a sharp run-up in inflation. Over the 12 months through July, measures of headline and core PCE inflation have run at 4.2% and 3.6% respectively, well above our 2% longer run objective. Businesses and consumers widely report upward pressure on prices and wages. Inflation at these levels is, of course, a cause for concern. But that concern is tempered by a number of factors that suggest that these elevated readings are likely to prove temporary. This assessment is a critical and ongoing one, and we are carefully monitoring incoming data. The dynamics of inflation are complex, and we assess the inflation outlook from a number of different perspectives, as I will now discuss. The spike in inflation is so far largely the product of a relatively narrow group of goods and services that have been directly affected by the pandemic and the reopening of the economy. Durable goods alone contributed about 1% to the latest 12-month measures of headline and core inflation. Energy prices, which rebounded with the strong recovery, added another 0.8% to headline inflation. And from long experience, we expect the inflation effects of these increases to be transitory. In addition, some prices, for example, for hotel rooms and airplane tickets, declined sharply during the recession and have now moved back up close to pre-pandemic levels. The 12-month window we use in computing inflation now captures the rebound in prices, but not the initial decline, temporarily elevating reported inflation. These effects, which are adding a few tenths to measured inflation, should wash out over time. We consult a range of measures meant to capture whether price increases for particular items are spilling over into broad-based inflation.
Look at that, E-mini go.
These include trimmed mean measures and measures excluding durables and computed from just before the pandemic. These measures generally show inflation at or close to our 2% longer run objective. We would be concerned at signs that inflationary pressures were spreading more broadly through the economy. We are also directly monitoring the prices of particular goods and services most affected by the pandemic and the reopening, and are beginning to see a moderation in some cases as shortages ease. Used car prices, for example, appear to have stabilized. Indeed, some price indicators are beginning to fall. If that continues, as many analysts predict,
Looking to crack
used car prices
4,500?
will soon be pulling measured inflation down.
Oh, that's right. They never
as
got
they
there
did
the
for
other
much of
day.
the past decade. This same dynamic of upward inflation pressure dissipating and in some cases reversing seems likely to play out in durables more generally. Over the 25 years preceding the pandemic, durables prices actually declined, with inflation averaging negative 1.9% per year. As supply problems have begun to resolve, inflation in durable goods other than autos has now slowed and may be starting to fall. It seems unlikely that durables inflation will continue to contribute importantly over time to overall inflation. We will be looking for evidence that supports or undercuts that expectation. We also assess whether wage increases are consistent with our 2% inflation goal over time. Wage increases are essential to support a rising standard of living and are generally, of course, a welcome development. But if wage increases were to move materially and persistently above the levels of productivity gains and inflation, businesses would likely pass those increases on to customers, a process that could become the sort of wage price spiral seen at times in the past. Today, we see little evidence of wage increases that might threaten excessive inflation.
Well, what I'm seeing right now is that the book seems to be under a lot of strain in many markets, and you're getting a lot of random movement now.
Show wages moving up at a pace that appears consistent with our longer-term inflation objective. We will continue to monitor this carefully. Policymakers and analysts generally believe that as long as longer-term inflation expectations remain anchored, policy can and should look through temporary swings in inflation. Our monetary policy framework emphasizes that anchoring longer-term expectations at 2% is important for both maximum employment and price stability. We carefully monitor a wide range of indicators of longer-term inflation expectations. These measures today
it seems like
broadly consistent
he's
with our
not going to
2%
say
objective.
anything about tapering, and that's why the markets are kind of reacting.
Noisy, we also focus on common patterns across the measures. One approach to summarizing these patterns is the board staff's Index of Common Inflation Expectations, which combines information from a broad range of survey and market-based measures. This index captures a general move down in expectations starting around 2014, a time when inflation was running persistently below 2%. More recently, the index shows a welcome reversal of that decline and is now at levels more consistent with our 2% objective. Longer-term inflation expectations have moved much less than actual inflation or near-term expectations, suggesting that households, businesses, and market participants also believe that current high inflation readings are likely to prove transitory, and that in any case, the Fed will keep inflation close to our 2% objective over time. Finally, it is worth noting that since the 1990s, inflation in many advanced economies has run somewhat below 2%, even in good times. The pattern of low inflation likely reflects sustained disinflationary forces, including technology, globalization, and perhaps demographic factors, as well as a stronger and more successful commitment by central banks to maintain price stability. In the United States, unemployment ran below 4% for about 2 years before the pandemic, while inflation ran at or below 2%. Wages did move up across the income spectrum, a welcome development, but not by enough to lift price inflation consistently to 2%. While the underlying global disinflationary factors are likely to evolve
No one should
over
short
time,
the mini Dow or
there is
MQ,
little reason to think that they have suddenly reversed or abated. It seems more likely that they will continue to weigh on inflation as the pandemic passes into history. We will continue to monitor incoming inflation data against each of these assessments. To sum up, the baseline outlook is for continued progress toward maximum employment, with inflation returning to levels consistent with our goal of inflation averaging 2% over time. Let me now turn to how the baseline outlook and the associated risks and uncertainties figure in our monetary policy making. The period from 1950 through the early 1980s provides two important lessons for managing the risks and uncertainties we face today. The early days of stabilization policy in the 1950s taught monetary policymakers not to attempt to offset what are likely to be temporary fluctuations in inflation. Indeed, responding may do more harm than good, particularly in an era where policy rates are much closer to the effective lower bound even in good times. The main influence of monetary policy on inflation can come after a lag of a year or more. If a central bank tightens policy in response to factors that turn out to be temporary, the main policy effects are likely
You should
to
tell us
arrive
when stuff
after
like
the
this
need has
happens on a
passed.
consistent basis.
The ill-timed policy move unnecessarily slows hiring
Why do I need
and
to
other
tell you? I
economic
mean,
activity
you
and
just
pushes
pull
inflation
up a
lower than
news
desired.
calendar.
Today, with substantial slack remaining in the labor market and the pandemic continuing, such a mistake could be particularly harmful. We know that extended periods of unemployment can mean lasting harm to workers and to the productive capacity of the economy. History also teaches, however, that central banks cannot take for granted that inflation due to transitory factors will fade. The 1970s saw two periods in which there were large increases in energy and food prices, raising headline inflation for a time. But when the direct effects on headline inflation eased, core inflation continued to run persistently higher than before. One likely contributing factor was that the public had come to generally expect higher inflation, one reason why we now monitor inflation expectations so carefully. Central banks have always faced the problem of distinguishing transitory inflation spikes from more troublesome developments.
Last
And
time
it is
this dude
sometimes
spoke,
difficult
nothing
to do
happened.
so with confidence in real time.
A lot of
At
it
such
has to
times,
do with
there is no
expectations.
substitute
People,
for a careful focus
he's
on
not
incoming
really
data and
saying
evolving
anything new,
risks.
in my opinion.
If sustained higher
But because
inflation were to
everybody
become a
came in
serious
here
concern,
with the expectation that
FOMC
it was
would
a big
certainly
deal, it
respond
becomes a big deal.
and
You
use
get what I
our
mean?
tools to assure that inflation runs at levels that are consistent with our goal. Incoming data should provide more evidence that some of the supply-demand imbalances are improving, and more evidence of a continued moderation in inflation, particularly in goods and service prices that have been most affected by the pandemic. We also expect to see
I
continued
still haven't
strong
quite. Oh
job
no,
creation.
they did touch
And
4,500.
we'll be learning more about the
Okay,
Delta
never
variant's
mind. I was like,
effects.
they're still kind of
For
having
now,
trouble
I
there.
believe that policy is well positioned. As always, we are prepared
It's
to adjust
curious that it
policy
didn't
as
just hit that and
appropriate
go,
to achieve our goals.
continue further. But
That brings me to a concluding word on the path ahead for monetary policy. The committee remains steadfast in our oft-expressed commitment to support the economy for as long as is needed to achieve a full recovery. The changes we made last year to our monetary policy framework are well suited to address today's challenges. We have said that we would continue our asset purchases at the current pace until we see substantial further progress toward our maximum employment and price stability goals, measured since last December when we first articulated this guidance. My view is that the substantial further progress test has been met for inflation. There has also been clear progress toward maximum employment. At the FOMC's recent July meeting, I was of the view, as were most participants, that if the economy evolved broadly as anticipated, it could be appropriate to start reducing the pace of asset purchases this year.
okay,
The intervening month has brought more progress in the form of a strong employment report for July, but also the further spread of the Delta variant. We will be carefully assessing incoming data and the evolving risks. Even after our asset purchases end, our elevated holdings of longer-term securities will continue to support accommodative financial conditions. The timing and pace of the coming reduction in asset purchases will not be intended to carry a direct signal regarding the timing of interest rate liftoff, for which we have articulated a different and substantially more stringent test. We have said that we will continue to hold the target range for the federal funds rate at its current level until the economy reaches conditions consistent with maximum employment and inflation has reached 2% and is on track to moderately exceed 2% for some time. We have much ground to cover to reach maximum employment, and time will tell whether we have reached 2% inflation on a sustainable basis. These are challenging times for the public we serve, as the pandemic and its unprecedented toll on health and economic activity linger. But I will end on a positive note. Before the pandemic, we all saw the extraordinary benefits that a strong labor market can deliver to our society. Despite today's challenges, the economy is on a path to just such a labor market, with high levels of employment and participation, broadly shared wage gains, and inflation running close to our price stability goal. Thank you very much.
And that's the end of his comments. Okay. So that's that. So you went long on all of that, huh? Good job. Let's see here. That's probably my wife. Okay. So after his speech, it is coming back. I wonder if this is just going to come back to the open price. That would be interesting. Key thing, Powell didn't mention whether he thinks Ronaldo should be at UTD or City. Jeez. Yes, did have a nice spike. So the only thing that Powell said is that it could justify it wasn't, what was the phrasing that he used? He only mentioned the taper at the end, saying that it might make sense to taper before the end of the year. Okay, so I think that everything that the Fed speakers have been saying about a taper in September or November, I think that we should still be expecting that, right? I don't think that any of our timelines change. It's like it's moving because they want it to move, you know? Everybody had a plan coming in here about something that was, so even though the fundamentals haven't changed, the orders are going to move us, right? Is it really 1,000 ticks that the NASDAQ moved? Oh, wow. I tell you what, the NASDAQ can really move sometimes, can't it? Now, the Hills story here is Powell signals Fed will soon cut back on stimulus. That's their headline. Okay. Even though the market is saying, oh, it's really dovish. Free money forever. No, that's not what he said, but I don't know. Some of us expected him to give like a timeline and discuss it and everything. I guess he doesn't really have to. Like, from his perspective, why would you even say anything about it? Like, is there a benefit to saying anything more than, oh, we might have to taper asset purchases? Or we may be able to taper asset purchases? Oh, 600. Okay, that sounds more reasonable. That's still a good chunk of change, right? That's still a few $1,000s on one contract. He doesn't really want to start? Maybe. I kind of get the impression that Powell doesn't really want to be the guy, like, how do I put this? Everybody thinks that it's like The chairman has a strong opinion about how the monetary policy should be enacted, and everybody on the board just kind of follows him in what he wants to do, right? And every time that I see his public comments, he very much avoids trying to make any kind of call like that. He only tries to communicate how the Federal Reserve is making its decisions, and you know, like everything that he just told us there was no new information in that. I don't think there was any new information in that. Like, I am disappointed that there wasn't new information in that. I was expecting that we were going to learn something significant about federal, like last year. That was when they announced the average interest rate targeting, and we learned a lot about how they were going to do that and everything else, right? This time, nothing. At least in his opening remarks. There might be more in the comments that we don't see that will get reported later, and who knows, right? He just doesn't. It doesn't seem like his intention is with any of his remarks is that those don't move the market. It looked like some good news to trade, but I doesn't have it all the time, so I don't trade it. Yeah, but you can very much predict what kind of news is going to move the markets and what kind of news doesn't, right? Because it's all about predicting future orders. And is that piece of news likely to change people's expectations about future fundamentals or future order flows? Well, when it comes to Federal Reserve's tapering of asset purchases, that is a piece of news that could very much affect it. And so even if there was no actual piece of news, the market will still move a ton. you see? Market drops due to casualties yesterday. Powell saves the market by saying the same things. Funny how that works. Yeah. Well, he is between a rock and a hard place. If you really taper and raise rates, the markets are going to hurt really bad. If they don't, inflation will keep going up. No surprise, he is not making any important statements. Yeah, probably right. Like the thing though is that does this mean that when the September Federal Reserve meeting comes along and the statement is that we're going to taper asset purchases in November, that's going to be a huge shell shock to the markets now because of that? I just can't find. Well, yeah, because if you're not really paying it, like, here's the thing, is that in order to make that determination, you really have to follow the news. You have to be reading and seeing, okay, on CNBC, what are they talking about? What is the key piece of information that they're unsure about and that they're watching? You know, because what will happen is you have this model about how the market is going to go going forward, and there are certain things about that model that you can predict what they're going to be very, very easily. But there's other things about that model that you can't, and that are bigger unknowns. We don't really know. Like right now, the big unknown is inflation and how transitory it is. That's the big unknown. That's the big question mark in everybody's little model, right? So anytime that we get a piece of economic news that is related to inflation, there is a possibility for a strong move. And how strong that move is going to be is going to depend on how many people are watching it and how big of a change from the actual number to be the change. The difference between their expectation and the actual number, right? So in the current environment, core CPI is really the biggest one. PCE today was a big one, but PCE was in line with expectations, so no move off of that one, right? Now, another example would be last time, consumer expectations really fell short of what we expected. And the consumer spending. The consumer spending numbers were really poor, right? So that means that next time that we have a consumer spending number, people are going to be watching it more. There's going to be more people watching that number. There's a larger pool of people potentially to be placing orders into the market based on that piece of news, right? And then when we get the number, and if it's like really bad again, then I think that you would have a really monster move in the S&P 500 off of it, right? It can be predicted. It can be predicted. You have to understand like how many people are going to trade it based off of the context, right? And that's really the key piece of information. Remember, orders are what moves markets. Price doesn't move markets. Price is the output. Price is the result. Orders are what causes it to move. So, are there going to be more or less orders because of this news? Are there going to be more buy orders or less buy orders, or more sell orders, less sell orders because of this move? And that's how you make the determination. Fear Greed Index is at 50% now. I wish I had a crystal ball. I know there are some things that are crystal balls, so like that's the thing is like there are some things that actually can be predicted, but what happens then is that the market does a very good job at accounting for it, generally speaking. But to the point, orders move markets. Okay. Look at all this. Look at how much it moved. That right there, that bar was his speech comments were released, okay? What's with this and this and this? And even after that, this and this and this and this. How does that all happen? Well, it's because of liquidity and orders move price. The market is not informationally efficient. Price does not reflect all available information. Right now, price reflects more what people thought of what Powell said, regardless of whether or not it actually matters, right? And it doesn't actually reflect what interest rates are really going to be 2 months from now. Could be appropriate. That's what he said. It could be appropriate to start the taper this year. Okay. Would you day trade though if you had a crystal ball? Maybe. It's like that one show, Primer, and first thing they did was go and make some big stock market plays. If you had a crystal ball and you could only ask one question, what question and how would you decide what day to ask the question? Oh, man. Well, if I were to ask, like, what would be the biggest, like, what would be the most helpful to, like, making money in the markets, I would probably ask which month in the next 5 years is going to be the biggest down month. Get out before that month. Chelsea Manning is back and has her sights set on Bitcoin. Oh boy. Oh boy. There was a big order there at like 03 half before, and it's not there anymore in the 10-year. Where would the E-mini be in the next 5 years and buy option futures contracts? Or you could buy leap years. The problem is that sort of a trade is only works really, really well in a period of like high uncertainty, right? So like, where will the S&P 500 be in the next 5 years? I bet you $1,000 that it will be higher than it is today. It'll be above 4,500 in 5 years, most likely, right? So if I were to buy, long-term option contracts with a strike price of 4,500, I suppose it could make, but it depends on how much they are pricing. Would have to move a lot more for me to really make money. So it's a lot more, but it's a much better trade when there's uncertainty about something. Like for instance, and that's kind of the issue with if you have to ask a specific question to a crystal ball, right? Is that we won't know what to ask, because where the biggest uncertainty and surprise ends up being, unless you could just ask it, what is going to be the biggest market surprise in 2022 or of the next 5 years? It's going to be the biggest market surprise. When is the next biggest unknown? Well, the next biggest unknown is going to be the jobs report on next Friday, right? Let's see here. Let's look at next week. Chicago PMI on Tuesday. Pending home sales on Monday. So pending home sales, Chicago PMI, ISMs. And then Thursday, we got Challenger job cuts, unemployment claims. And then Friday, we've got the unemployment. Okay, so unemployment is a big deal, right? Just forexfactory.com is my favorite calendar. Forexfactory.com, it tells you what they all are. It gives you some idea of impact. It goes into detail. My recommendation to them, I'll always, like, guys, if you want to be ahead, if you want to be above the average retail trader, all you got to do is this. Open up Forex Factory, look at all of the major economic releases for the month, and click this detail button. Click this detail button, read what the notes are, and then go to the last release and read what it says. I'm out in the report. Here's the report. View full report. National Employment Report. There we go. It tells us all this stuff about it. And often, so actually, let's not do the ADP one. Let's do the non-farm employment change. Okay, latest release. Okay, so here is the release. So here you can read this whole release from last time. There's a bunch of tables and stuff. And then if we come back, we should explore the website too. So I think if you come to economic releases, employment and unemployment here, somewhere in here, classroom maybe, K-12 resources. Oh, so it's in here somewhere. There, somewhere on this website, they give a deeper explanation of it. Daily FX is good as well. Employment situation report. Maybe it's that. Technical note. Like, there's a lot of stuff to read about these. Quarterly tables. Annual household. Oh, okay, here we go. Methodology for seasonally adjusting National Household Survey label force adjustments. Right. There's a lot to read in here about, like, how is this report generated? I do recall there being on their website an easy explanation, though. Let's see what's in the classroom. Let's see what's in the classroom. The teacher's desk. Eh. Redesigned news releases. Ooh. Cool. Anyways, point is, understand every one of these reports and what they mean. You understand every one of these reports and what they mean, you have such a huge advantage. Because then you're going to know, based on the situation, which reports matter and which ones don't. And when it actually happens, does it matter or does it not? Could you give your crystal ball? So, let's see here. Oops. Didn't want to do that. So the E-mini's coming back now. Interesting. You think they'll find some support in the 90 area, though? Ooh, hold on a second. Oh yeah, I need to move this back over here. Now I'm gonna have to go and search deeper because I was like pulling information out of that. There was a more detailed explanation of the report somewhere. Volatility index down 2.24 points. Powell punt means taper won't be rushed. Dollar declines. Yeah. And it looks like the dollar is back at its lows near 92.65. that was an old tweet. Well, we got about 5 minutes left here. I'm going to have to decide what I want to do with this. I think, like, the thing is today, rates going to decrease quite a bit, but that doesn't necessarily mean it's going to be like that on Monday. Although something that we do have to watch out for is that they often like to fill in these gaps from the roll. So that could be all the way up to 133.16 in CN. I don't know. This move right here, is it the Japanese yen again? It looks like it is, yes. You see, oh yeah, how did our poll come out? 70% say that it will be greater than 70. And that was after 40 votes. Oh wow, we got 40 votes. Oh, thank you guys. Let's end the poll now. That air's turning on feels nice. I am a little disappointed in today's. I really thought, not I really thought, but I was hoping that we were going to get something more informational, you know? We should do a poll each morning on whether ZN or ES will hold the above overnight high. I don't know if that poll would be all that interesting, because if we come into if we were to do it to the ES, just everybody will just say yes. Most of the time, at least, you guys would just say yes. I find it a little curious that they did pivot at 4,500. That doesn't mean that they won't go higher today. It's just that in that kind of a situation, a price like that ends up being like getting above it, like brings in activity and it goes further. And it didn't. It was like, okay, now we're right where we want to be. And then they were done. We need a title for today, Jackson Hole. Powell's and Jackson Hole comments. And we should say Powell says nothing at Jackson Hole. Says nothing important. That's my take. Powell tries his hand at day trading. Are we ever going to get a time period where, you know, there's a strategy for trading the ES that works better than just being long? Like seriously. So this is curious also that the 10-year is like at its high, but the 30 and the 5 are not. The 10-year is basically being slightly constrained. You can actually see like people are trading it there. I'm also noticing that the rights in the price action are once again not matching up completely. Now we should be advised, but before I go, it's about time to close up here. I got 2 minutes. This might not be over today. There is the whole weekend conference, and they might say more about tapering, but it's not going to be live. So you could get a situation where some volatility comes into the markets, and you might not know what's going on. You might be clueless, right? So that could be interesting. I don't know what you do about that. I suppose what you do is you quit for the day and you come back Monday, but these could still change. Like a low of the days in treasuries, is it a possibility? Yeah, actually it probably is. I wouldn't say it's a likely possibility, but it should be on your radar. It's a little clickiness, and I'm going to keep an eye on the dollar here. And the dollar comes down to that 92.6 and they all kind of like, okay, maybe it's gonna go. We should prepare ourselves. Survive on Friday, thrive on Monday. One thing that I've got to keep in mind for what I'm doing is that Tuesday is when this rolls over. So but there's still plenty more day to come, so I'm not going to make any decisions right now. I basically only lost $10 on after all of that. I only lost $10. Can you believe that? I guess 20, depending on which site. Like I could have taken it off at 100 yesterday. I really should have done that, but oh well. All right, guys, it's time for me to go. I will see you Monday. We'll have Gary Norton interview up. In the meantime,